All right, let's dive right in. NIO just dropped its January delivery numbers, and honestly, they're a total head-scratcher. Depending on how you look at them, they're either a complete disaster or a massive win. So we're going to unpack what is really going on here.
And hey, before we get into the weeds, let's get one thing straight so we're all on the same page. The company's name, it's pronounced NIO, not N-I-O. Okay, got it? Good. Let's get to those numbers.
So here's the central mystery. NIO's January was a tale of two completely different numbers. One of them looks really, really bad, and the other, well, it looks spectacular. Let's check them both out.
Okay, first the bad news. Compared to just the month before, December 2025, NIO's deliveries absolutely plummeted by a jaw-dropping 43%. I mean, that is a huge drop no matter how you slice it.
But, and this is a huge but, if you compare this January to last January, deliveries are actually up by a whopping 96%. Yeah, that's right, they nearly doubled what they did in the same month just 1 year ago. So, what gives? Which one of these numbers is telling the real story here? Is NIO in deep trouble, or is this just a sign of incredible growth? It's confusing, right? Well, let's clear it up and dig into the details.
You know, to really figure this out, we can't just look at the total number. We have to crack it open and see how each of NIO's individual brands actually performed. This is where the story gets really interesting.
Okay, check this out. The main NIO brand itself, the premium cars, is actually up a massive 162% compared to last year. That is fantastic news. But then you look at the sub-brands. Firefly had a big monthly drop, sure, but the real flashing red light here is the ONVO brand.
And there it is. This is the smoking gun. The ONVO sub-brand is the only one that's down compared to last month and compared to last year. That year-over-year decline, that's the major red flag we were looking for.
You can see it so clearly right here. A 62% drop from December and a 41% drop from the year before. This tells you the weakness isn't just some one-month fluke, it points to a potentially deeper issue with what's happening with the ONVO brand right now.
So the big question is, why? Why this huge drop-off, especially right after a super strong end to 2025? Well, it turns out there are a few really clear reasons, and believe it or not, it's not just a problem for NIO. Okay, three big things happened. First, it's just a seasonally slow time around the Chinese New Year. But the real story is what happened at the end of 2025. There was a purchase tax that was about to go up, so everybody, including NIO, pushed sales like crazy. Basically, they convinced a ton of people who would have bought a car in January to buy it in December instead. They pulled forward all that demand.
As one source put it perfectly, the buyers are exhausted. After that buying frenzy in late 2025, everyone just hit the brakes. And this isn't just a NIO thing, it's an industry-wide problem. Competitors like XPeng saw huge sales declines too. It's a market-wide hangover. So NIO sees this market-wide problem. What's their game plan? What are they actually doing right now to fight back against this slump and get people back into their showrooms?
Well, they've launched this new incentive program with a pretty catchy name, the 7-0 Worries Plan. The heart of it is offering nearly 0% interest financing for 7 years on most of their models. That's a pretty sweet deal designed to make hesitant buyers, pull the trigger. But here is a really crucial detail. This awesome incentive plan, it does not apply to their flagship ES8 model. And why is that? Because they don't need to. The ES8 is so popular that the waitlist is already backed up all the way to May 2026. That shows a really powerful pocket of strength for the company. All right, so incentives are the short-term fix. What about the long game? What does the rest of the year look like for NIO? Well, it looks like the company's betting big on a whole slate of new and updated cars to get that growth engine firing again.
And their product pipeline is packed. They're rushing out the ONVO L80, like right now, to grab customers who are waiting. Then in April, we're getting the launch event for the brand new, bigger NIO ES9. And after that, in the third quarter, an updated ES7. It's basically a full-on product offensive for 2026.
Now, NIO is walking a bit of a tightrope here. Word got out that a refreshed 2026 version of the ONVO L90 is on the way. The risk? Well, if you announce that too early, people who are about to buy the current model might just decide to wait, which hurts sales right now. It's a really tricky balance between building hype for the future and not killing your momentum today.
So, that leaves us with the million-dollar question. You've got this tough, exhausted market on one side, but you've got this exciting pipeline of new models on the other. So, is this January slump just a temporary dip in the road? Or could it be a warning sign of bigger challenges to come for NIO? Well, that is what we're all going to be watching.